We are back for another episode for the nonprofit leaders in the room. My name is Tosha Anderson, and I am the host of a modern nonprofit podcast. And this podcast is sponsored by the charity CFO. I am bringing another accountant in the room. Don't run off yet, guys. We're going to be talking about recession proofing. And I think this is really timely in some of the economic uncertainty that we've been dealing with and how nonprofits like yourself could maybe weather the recession. Look, we're no stranger to this. I feel like I'm living COVID 2.0 and all of the uncertainty of economics and fundraising and financial sustainability within nonprofits. And so I brought along my new friend here, a former accountant, auditor, partner at a pretty significant firm called Citrin Cooperman. And Jason, you have been working with businesses, I'm sure, of all sizes, of all types, for many, many years now, and over 20 years, I think. And I just want to say thank you first and foremost for coming on and sharing your words of wisdom and helping us better understand some strategies that high growth businesses, nonprofits, and others that you've seen have been able to make some data-driven decisions with the ultimate goal of being self-sustainable. And maybe you can give us some tips on how to anticipate, survive, or put us in a well position to survive this looming recession that we've been hearing about now for the last many years. So that we keep hearing about, I don't know, is it happening, is it not? I don't know. So let's just dive right into it, can we?
Yeah, absolutely. Thanks, Tasha.
Let's just dive into the right question. We're just going to come right out of the gate, shot out of the cannon as I do. How can nonprofits prepare financially for this potential economic downturn? What are your top strategies
Yeah,
here?
yeah, it's interesting. I mean, it's an interesting time period. I mean, I'm not sure when we're releasing this, but this week has been fairly tumultuous with government funding, grants,
Mhm.
potential restrictions or pulling back on the funding of grants that have already been approved for that
Right,
matter.
right.
So not only are we looking at, could there be a recession? Is there going to be a recession? We don't know. But then you have some turmoil, I guess, in what the government might be doing from, as they call it, from a cost efficiency look, taking a deeper look at the grants that they are providing, and which is creating some uncertainty in the nonprofit space. So we work
Sure.
with a lot of nonprofits. Some of them do have federal funding,
Hmm.
and it was certainly a shock wave sent through the system. And I think what it did too, though, is it started to create a sense of, hey, you know what, are we prepared for something that might happen in a downturn? So now there's a lot
Sure.
more questions, a lot more conversations that are being had about not only is there, what do we do in a recession, which,
Hmm.
is typically, a longer period of time, you can prepare for it a little bit better. But are we prepared for, a sudden shock like, we thought might happen this week? And
Sure.
so the number one thing that we always do when we talk to our clients is, do you understand the cash flows of
Yes.
your organization? And it doesn't matter if you're a nonprofit, for profit, even your own. I mean, even personally, do you understand your
Yeah.
cash flows of your organization?
Hmm.
And nonprofits, they really live off of the budget and the budgeting process that they've created at, hopefully before the fiscal year starts. But you have to be prepared for cash flows and cash inflows and outflows that may not be in accordance with the budget.
Hmm.
And so what we like to do, and I'm sure you do this with your clients as well, is let's make sure we have visibility looking forward from a cash flow perspective. And we like to look at it at least, it's the typical 13-week cash flow. It's a 1 quarter forward-looking cash flow, and it rolls forward. And so we do it either weekly or monthly, depending on the cash position of the
Hmm.
organization. And that gives them a sense of, okay, we know that we have confidence that we can look forward at least 3 months and have confidence in what our cash flows look like. And then pairing that with the budget, you can start to forecast that out on an annual basis beyond that. The other thing is, for nonprofits in particular is, programs is critical.
Hmm.
Looking at the overall expense structure of the organization. Again, what we find a lot of times is that nonprofits rely sometimes too much on the budget. It's like, well, it's in the budget. We can spend that because it's in the budget. But if
Hmm.
you're not getting the donations, if you're not getting the, the generosity, the contributions that you thought you might be getting, you need to be, there needs to be time to revisit, your budgeting process and how you forecast. And then the other one thing I want to, really emphasize is leveraging your board. So as
Mm.
a nonprofit, there's some, nonprofits typically have board members or typically volunteers,
Hmm.
but there's typically some very either influential or individuals that have significant expertise in certain areas that
Sure.
are part of the board. And so
Hmm.
having conversations with them, bankers, banking relationships, being in position from a financing perspective to weather a downturn, whether it be, setting up a line of credit or
Right.
establishing some sort of, financial safety net is important. And then the last thing I'll mention on the weatherproofing is just because you're a quote unquote nonprofit or not for profit doesn't mean that we shouldn't be looking at and running the organization like a business. We still want to run a profitable organization, and we don't want to run a business with zero cash. We want to start to build cash and cash flow within the organization, so you have the ability to um, have some extra reserves if things don't happen as planned, and also reinvest back into the organization. And so not only are you, if you're the organization, typically you want to grow the organization, and so having extra cash and creating a budget where there is additional cash flows for reinvestment and for, quote
Hmm.
unquote, a rainy day if things go bad is also critical. So we always talk about, even though you're a nonprofit, let's put your for-profit mindset on and run this organization like you are a for-profit, driving, obviously focusing on the programs and driving value based on your mission, but also, creating cash flow reserves so you can reinvest and have for a rainy day.
I I love everything that you've said, Jason. I mean, so many things just to kind of recap that I'm trying to go back. Wholeheartedly agree. I tell people, the budget is fine and dandy. It's usually a requirement to do your board. It's in your bylaws. It's a process that you do. But your budget is really secondary. If you don't have the cash to execute on that plan, nothing else matters. So at the end
Right.
of the day, cash is primary. And you also talked about budgeting, and where we talk with our clients a lot, budgeting is just the first step. If you're not using any sort of forecasting to understand, not only are you on track to meet your revenue targets, are you on track to actually spend in accordance with your plan for expenses? And then taking that one step level, is there a point where your cash balance is going to run out? And is there a
Mhm.
point where it grows back to a normal level? And this is the secondary part that I think a lot of nonprofits are not quite there yet, in understanding their projection or their forecasting side of things. So totally echo everything that you said. Cash is the most primary thing. And I love what you mentioned too about, I've heard different iterations of this. Nonprofit is a tax status, not a business model. It's okay to make
Mhm.
profit in the nonprofit world. And anyone listening is like, yeah, Jason, tell that to like my constituents or the press or whoever's going to put me on
Yeah.
blast.
Yeah.
But the reality
Yeah.
is, we do have to plan on having some level of surplus, whether we call it a profit, a surplus, excess, whatever we want to call it.
Yeah.
We have to have a plan to have excess at the end
Mhm.
of the year for your point. And now is just a perfect time, and I would argue even COVID-19 really drove it home. Like surplus is necessary so that we can build a reserve for the rainy days, for emergencies, right? The only way that you're going to have money set aside for a reserve is if you just think about this, your personal finances. How do you get a savings account? You bring in more money than you spend, and you do that over time, and you accumulate a savings. And that's why I tell people break it down kind of like personal finance. The same is true with nonprofit organizations. If you want to build a reserve, the only way to do that is to spend less than you bring in over time. And we need
Yeah.
that, we know, for rainy days. But then also, I love what you said too about reinvestment. And there's so many times that I've had conversations with boards or leaders that want to reinvest back into their organization because maybe they're trying to do something that they've not yet identified a funder that's willing to sign off on or fund, or maybe they only get
Yeah.
partial funding. And so by having this excess that they've either accumulated or they have excess in their annual budget, they're able to make more money than what they are going to spend. That allows them
Mhm.
to reinvest in the what's next of the world. And what
Yeah.
nonprofit leader would not like to be in that place? Let's be honest.
Yeah, and I mean, technology is severely underinvested within the nonprofit environment, and it really sets, technology can be I guess a good and a bad, right? You can spend a lot on technology and then end up not using it how you want to be using it, or it can be a challenge, or it can be frustrating. But if you
Mm-hmm.
leverage technology the right way, it can really create significant efficiencies. It can really drive better donor relations and relationships and awareness. So, what if you're running your organization like we just talked about with a surplus or with a business mindset, you're not actually, you're not just putting it away and saving it so that nobody can touch it. It's you can now reinvest. You can say, hey, you can get the board's approval to reinvest. You don't have to have a capital campaign to, for some of these things. And it's just a healthier organization. And I think donors like to see that. They don't want to see they don't want to give to a nonprofit that is constantly struggling from a cash position, that they can't trust their financials. They look like they may not be making it. They want to invest
Mm-hmm.
in healthy organizations that are, sophisticated donors want to invest in healthy organizations that have their back office in place.
Mm-hmm.
And as a result, then are able to create a larger impact on the community.
Absolutely. Speaking of kind of the climate that we're in, shifting gears a little bit, anybody that follows me on LinkedIn knows I've been posting about this for a while. I used to be a former auditor. I now work with hundreds of clients every month, and 85% of my clients are audited. We are not being audited or scrutinized or having people poke and prod into our work is nothing new to us, certainly. Under this new kind of era of, just really questioning like spending, are these contracts in accordance with what we thought? This is not going away, right? This is not going away. And I think that more states are going to require audits, or that's going to be a trickle down impact from the feds, right? There's going to be more and more scrutiny. And this isn't really just with this change in administration at the presidential level. I see this even on a local level. We're here in St. Louis City. Everything is a political topic, even if maybe it in the past wasn't, right? There are pockets of money and there are people that are very passionate about how it's going to be spent. So I say this all the time with our clients, like, get used to the scrutiny, get used to being audited, be prepared for an audit, whether that is with your federal funding and that becomes even greater scrutiny, which PS, I'm sure it will. But that's also, I would think the same would apply for state funding, local funding, et cetera. So as we're kind of on this topic of scrutiny, I know that you've spent a lot of time in and around audit spaces, including nonprofit organizations. And some of you all listening may not know that audits come up for a variety of reasons. A lot of our clients get audited because they opt into it. They know that it's a good strategy for fundraising. Some of their more sophisticated donors want to make sure, Jason, to your point, that things are up to snuff, right? Other times, and more often a regular occurrence, the states require audits. But here's what people don't really realize, right? States have such a spectrum of the threshold for which you have to have an audit. For example, I'm in the state of Missouri. There is zero state requirement to have an audit. I am in
Mm.
St. Louis, right on the river of the Mississippi. I could maybe squint and see Illinois from my office right now. And
Mm.
they have a much smaller, I think last I checked it was like 300,000, although I think they've talked about increasing it maybe to a half a
Mhm.
million dollar budget, then you get an
Yeah.
audit. So that's a
Mm.
pretty big difference if you're
Yeah.
incorporated in a body of land that happens to be 10 miles from another body of land that it's wild wild west over here. Just the Gateway Arch. It's just like, no rules. So anyway, this is what is, I think, going to continue to change and evolve as state governments are taking a hard look at the accountability for all of their contractors, all of the beneficiaries of their government funding. I think constituents are going to continue to ask, is this, the best use of funds? So all of that to say, I think this is going to continue. So let's talk a little bit about how nonprofits can set expectations for what they should be having or not having with respect to audits. Or what would you advise nonprofits, kind of, if they've not been audited, what should they be bracing themselves for? What should they be prepared for so that they can breeze through this?
So California, the requirement is 2 million.
It's like 2 million. Yeah, exactly.
So any organization over 2 million, which is not a lot,
No.
is required to have an audit. So
yeah, especially when they cost like 30 grand or more, depending on where you're at and how big
exactly.
So it's like, which is crazy over in Illinois. I should be over here, going to Springfield and advocating for these nonprofits, because it's like, oh, they made like 300,000. They go to spend 10% of that in an audit fee. And then, oh, by the way, you can't spend more than like 15% in administrative costs. You're like, what do you want me to do? But anyway, I digress.
So I've seen this from both sides. So I first 10 years of my career I spent in financial statement audit. And then since that point, I've spent time supporting clients on the other side of that. And so the first thing that I'll say is, as it relates to a financial statement audit, is it's not as scary as it sounds, as long as you're prepared, which is everything in life, right? So if you do nothing the whole year and then you try to clean it all up at the end of the year and try to get through the audit, it's going to be very painful. But it's best practices that is common sense. So just like any other business, do you have a process to close your books every month? Do you have the sophistication within the accounting department to ensure that you have the right processes, everything from paying bills to invoicing, to communications with donors, to closing the books, and then producing, hopefully monthly financial statements. That is a critical process, and that gets into misappropriation of funds or fraud too. If you don't have good processes, and you have somebody in-house that has total control over everything, you're creating a lot of risk. And so when you look at from a business or from an organizational perspective, we're always looking at how do we put processes in place to reduce risk. And so that's one of them. Do you have a good process? And can you close the books every single month and produce financial information? As an executive director, CEO, management team, that should be a requirement of your organization, so that you have the right visibility to be able to make decisions and to drive the organization forward. In addition, it also helps with communications with the board and driving confidence with the board. But if you close your books every month, you're doing it the right way, you should have supporting schedules for all of the accounts within. For a for-profit, it's called balance sheet. For a nonprofit, it's called statement of financial position. So we should have a reconciliation or a supporting schedule for each of those balances. Everything from, cash, your supporting schedule is your bank reconciliation, prepaid expenses, accounts payable, those types of things, basics. And if you have a process to do that, when you get to the financial statement audit and the auditors provide you a request list, that's 80% of the request list is, give me your supporting schedules as of the last day of the year for everything on your balance sheet or your statement of financial position. And so that's 80% of the way there. And then making sure that, what the schedules tie out, and that if you're asked questions about those, you have an understanding of what they are, and you can pull supporting documentation as needed. That will get you, 80% of the way through the audit. Where we see challenges is when they don't close the books monthly, or they're 3 or 4 months behind and they're scrambling and they don't have a good process to close the books. And so they're not reconciling every account on the statement of financial position every single month. And when you do that, as with your background in accounting, then you have stale balances on your balance sheet or statement of financial position. You have balances that were there and they never go away. It's not like the income statement where they go away the next year and it starts over. It's, hey, these have been sitting here forever.
They linger. Mhm.
And now you have to reconcile what was in that account. Oh, I don't remember what's going on here. And so being able to reconcile those accounts every single month is um, by far the number one, what I would say, priority of creating or simplifying the audit process.
Yeah, it's really funny. I don't know if I've completely shared this on this podcast before, but people have asked me kind of offline, how did you end up as an accountant working in the nonprofit space? So, rolling back the footage a little bit, I was in public accounting, young, ambitious person working primarily with construction companies when I first started. But I really love mission-based businesses, and there was an opportunity to move into kind of a more senior position on the nonprofit practice group. So I took that opportunity, and what I quickly realized was the disarray of the nonprofit audits. And this is
Right.
not intentional. Look, I work with so many nonprofit leaders; they are not trying to make a mess of their audits. But what were some of the common things that I saw that created a mess? I would probably put it in two different buckets. Number one, turnover in the
Mhm.
accounting function, whether it's like a
Yep.
part-time bookkeeper or, the integrity of the accounting is lost. And accounting, like a lot of things, is a little bit open to like interpretation, and like everybody kind of creates their own way of doing it. And so when you extrapolate that over time, you have all these different versions of things you're trying to piece together, and it doesn't quite jive. So turnover in the accounting function is a main source of dysfunction with respect to our accounting records. And then the second thing is understanding what close the books means and what it doesn't. And so
Mhm.
often I see nonprofit, we'll just call them accountants, or the function of accounting, whoever that might be. It could be an office manager, it could be the executive director doing their own books or whatever. They think close the books essentially means getting the transactions into maybe an accounting software like QuickBooks and reconciling
Yep.
the bank statements. And
Right.
that is not closing the books for essentially any accrual-based accounting nonprofit that gets audited. Like that's like step one. That's step one
Mhm.
that my team does when we close the books. Jason, what you're saying is like take it the next step, because there are other things that didn't necessarily hit the bank account. We're talking about your invoices, your receivables, like what do those look like? Payables, did you actually cut those checks or not? But maybe they didn't clear the bank account yet. Is there accrued payroll that we should be talking about? Are there other things that we need to take into consideration? And you're saying those end up on the balance sheet. And this is what I tell people, those are all those Excel spreadsheets that your accountant keeps outside of your accounting system, that your auditors are going to ask for. And really well ran accounting functions prepare those spreadsheets. I'm keeping this very simple, Jason, because most people listening are
Yeah.
not accountants.
Absolutely. Yeah.
Those spreadsheets compound every month, right? And then you get to the end of the year, you're like, cool, auditors, here you are. Here's my work.
Yep.
And so, to your point, and I wholeheartedly agree with you, that's 80% of the work, um, for sure, is just building on that foundation month after month after month. So if you are an accountant or if you're a leader of a nonprofit and you're like, I don't really know what my accountant does or what have you, ask for how do they close the books, walk through. And if you're a pretty sophisticated organization over $1 million and they tell you, well, I reconcile the bank accounts and I print some financial statements, you're probably missing a lot of steps that are going to show up in the audit for sure.
Yeah.
And then
Yeah.
let's talk about the other 20% of things that come up with like improper documentation, lack of internal
Mhm.
controls, no policies around procurement, or the dreaded single audits for any of you that are getting significant federal funding and you have to do more of a compliance audit. Jason, what are
Yeah.
you seeing comes up as a frequent offense in the audits that you've done with your clients, kind of in that regard? Let's assume the
Yeah.
accounting is not in bad shape. But what are the other things that will trip up nonprofits?
General organization is important. So, the other 20%, as we talked about, is step one is having those schedules in place that tie and support to the numbers. And then step two is, the auditors are going to dig in a little bit and they're going to ask for supporting documentation. So, do you have a good process for filing, whether it's manual or hopefully, at this point, in these days, we recommend most of the information being held electronically, but do you have a good filing system where you have supporting documentation that you can point to so that you're not having to now, go back and find it and research? And that's where things can take a long time is, you get some requests for, okay, can I see these invoices or this documentation or these contracts? And now we're searching. We're like, oh man, that contract's 3 years old. I don't know where it
Mhm.
is. It's in some box in a warehouse, and we got to go dig
Mhm.
through it. And I
Or
mean,
we never we
all that
never
stuff.
captured it to begin with.
Yeah, exactly. And so having good organization is critical. And to your point on the government contracts and the single audit, I mean, that is a compliance contract. So if you have a contract with state, local, federal government, as the organization, you have to understand what that means, and what the compliance requirements are associated with that contract. In some cases, to be honest, some contracts aren't, there's so much compliance requirements that it's not even worth the funds that you're getting because of
Mm-hmm.
all the additional steps and hoops you have to jump through just to comply with the contract. The cost of
Mm-hmm.
that might, not make getting the actual contract worth it. And so evaluating
Yeah.
that in advance before just saying, yay, we got a contract. Okay, well, what does that mean? And what's compliance?
Mm-hmm.
And now, oh, wow, now we have to have an extra audit and we have to, spend more money over here. And so
Yeah.
that just the overall organization, having a good filing process, making sure that, and then, again, best practice is documenting the processes, right? So, everything from the payable or procurement process, as you mentioned, which is, do you have your policies and processes documented, is another step because the auditors will be asking for that. If there's any unique accounting, trying to think of unique accounting situations, you may have to have a white paper or a position paper based on, that particular issue.
Mm-hmm.
Lease accounting came up, has been a hot topic the last number of years that some of that changed. So sometimes the auditors will help you through it. Sometimes they'll throw their hands up and say, well, you know what, you got to figure it out on your own. And
Yeah.
so some of that, becomes, as the organization grows, becomes more sophisticated. And that's where I think someone, like yourself, your firm, what we do adds so much more value to organizations as they grow, because don't have the sophistication internally within the accounting function. And now they need that extra level of sophistication as they've gotten beyond that 2 million mark. They got up to a 10 million mark, and they want to continue to grow. They need to have that extra layer of sophistication.
Yeah, it's what I tell people, more money, more problems. That's what I tell my
Mhm.
clients, right? I mean, it's a blessing and a curse in some ways. And I was gonna say one more thing about that as we wrapped up the conversation with the audit. Oh, yes, I remember. If you brought up a topic that I think some people don't realize when they apply for funding, they see the initial application. They don't necessarily see the unintended consequences of accepting those funds until the contract is
Mhm.
is given, right? And to take it a step further, a lot of times they sign the contract and there's tons and tons of fine print. Who reads the fine print?
Yep.
And then they realize that it might trigger things like an audit now, and they accept it.
Yep.
I've literally seen this happen. Like, oh, they got a gift for 20,000, but now they have to pay $30,000 in audit fees. And you're like, that was a bad
Right.
deal. Um,
Right.
so especially in government funding, and I'm sure this isn't for every government because I don't know every single municipality, so don't quote me on this, but I do know a lot of our clients that get funding, especially from government sources. The government sources, including the feds, are very transparent about what that compliance looks like and what their audit components are going to look like. So don't be afraid to ask your contact at whatever funder you have if they have what we would call audit guidelines or compliance guidelines. And I know back when I was in public accounting, say, for example, I would be auditing a tax credit program that a nonprofit was participating in. I, as the auditor that was employed by a firm, would go to the government's website, pull down the audit guidelines that's publicly available, and then use that in my work to say, this is what I need to do in order to complete the audit in accordance with the state of Missouri, for example. If you are receiving funding from any significant source that will likely have a layer of review, think about any municipality money, any agency money that's filtered down through the feds, through the state level. Maybe you're even getting funding from pass-through organizations. So kind of think more of like I don't want to call them foundations, but we have several of these like big hubs that get sources of funding and then they disperse it to other organizations. Before you sign on that dotted line, just ask a lot of questions. Be really curious about, what are the compliance requirements, or can you show me where the audit guidelines are so I can make sure that we have the right internal controls set aside? Because we're talking a
Yeah.
lot of financial component here, but there's oftentimes a programmatic component that your
Hmm.
program team might need to beef up some of its record keeping, or some of its processes we might need to expand. And so you just want to understand the full implications that this funding source is going to have and the ripple effect throughout your organization, not just on your financial side and your audit side. I think sometimes we think
Yeah.
financial, we think both just strictly numbers,
Yeah.
dollars rather, but it can impact programming, fundraising, et cetera.
Yeah.
So
Yeah,
so
for
that's
sure.
good.
The other thing is, the auditor um, should be your friend, not your enemy, right? Like you're like, oh
Totally.
my gosh, I hate my auditor. It's so tough. Like they're so hard on us. Leverage the relationship you have with your auditor when those things come up. They should be in tune with what the latest and greatest is. They
Mhm.
should be in tune with and have a better understanding of the compliance associated with certain things. So leverage that relationship if you have questions.
I love that you said that. Back in the day when I was in my early 20s and I would go in and audit these nonprofits, they're like, you don't really look like an auditor. I'm like, I know, I get
Yeah,
that a lot. Or you're not very scary. I'm like, I'm really
yeah,
not. And,
yeah,
I tell people, like, look, I think people have this idea that auditors are out to find issues. And I don't know, maybe I'm an anomaly here, but I'm like, I have one primary job, and that's to get through this audit and give you a clean audit opinion. I'm not trying to create chaos for
mhm,
you. I'm not trying to be punitive or gotcha. I'm
yeah,
trying to, get you a quality audit, and do my job, but also work in collaboration with you. And admittedly, I never finished my story. That's how I ended up in the nonprofit space because while they were really, really messy, these are well-meaning people that just needed to be like kind of shepherded and taught like, okay, I'm trying to do better, but can you show me how to do better? Can you
yeah,
help me do better? And through that relationship of me being an auditor and working very closely with my clients, we were able to turn jobs that were notoriously messy, notoriously over budget to some of the most profitable audits that we were running. Because people in this sector, in this industry, I think we get a bad rap that we're just trying to make a mess of everything. We don't know. We're not all
yeah,
accountants. I mean, I am, but I'm speaking for everyone else. And I wholeheartedly agree. I mean, that's the way that I was able to really turn things around for my clients is to forming those relationships between those running the organization and those with the audit. And look, you pay them a lot of money and they would rather you ask the questions along the way for the year than get in there and things are a complete mess and then they're spending a lot more
right,
time fixing it up. So ask the
yep,
auditors the question. They're happy to answer. And more likely than not, they're not going to charge you an extra bill for that. It's just kind of a courtesy.
agree.
All right. Jason, I know we're running out of time a little bit, but I want to touch on one thing real quick, because you mentioned it earlier, and we haven't really talked about this on this podcast. But since I have your ear right now, and you are working for a large public accounting firm, I want to talk about fraud a little bit. I want to talk about fraud a little bit because again, we don't really talk about it, and we talked about audits and things like that, and what a lot of people are misunderstood that their normal audit is there to catch fraud. Now, that's a whole nother topic of conversation we don't have time for today, but most audits are not there to like, we're going to find all of your fraud. That's not actually what
Mhm.
audits are designed to do. However, fraud still happens within organizations. So, what are some of the things that nonprofit leaders could be looking out for
Yeah,
to just, we're not assuming fraud is happening. I don't think anyone ever assumes it's happening, but what are some of the subtle signs, the red flags that we should be looking out
yeah,
for fraud within our organization?
yeah, absolutely. I think what's unfortunately, I think fraud happens as much, if not more, in nonprofits than it does in for-profits. And I think, sometimes the thought is, well, they have such a great heart, they're working at a nonprofit, they would never do this. But the reality is it happens all the time. And it's, we use in the accounting, we use the term internal controls, are there
Mm.
controls in place? But the reality is, a lot of nonprofits, they don't have the infrastructure or the or the resources to have significant segregations of duties and
Mhm.
multiple people doing multiple different things and the oversight. And so it creates an environment that is more ripe for fraud. I always look at things from a risk-based perspective. And so how do we understand the environment and reduce the risk as much as possible? And the easiest way for somebody to commit fraud is if an organization says, okay, I don't really understand anything about accounting. I just know we have to get it done. So we're going to hire someone and they'll take care of it. And I'll never, I don't know what they're doing. They'll just take care of it. And so that I, as the CEO or executive director, can do all the other stuff. And that is ripe for fraud because you've just given full control to somebody. And that individual is probably also processing payroll, probably
right.
Cutting checks, and they can sign off on the checks and they can make transfers. If one person has full control over everything, that is a very high risk situation. It doesn't matter how nice or how sweet the individual may appear to be. That's ripe for it's high risk situation. And to be honest, that individual, it's very tempting. It can be very tempting. The person's there, they have full control. It's like, well, I need a few extra bucks this week. It's not a big deal. I'll pay it back next week. And then what ends up happening is continues to happen over a period of time. So we talk about segregation of duties, and when it comes to anything associated with the flow of cash in an organization, there's got to be at least two levels of approver. So when you're talking about accounts payable, the same person shouldn't be receiving the invoices or the bills, entering them, paying them, signing off on them, et cetera. There should be a process as the leader of your organization, as the executive director, as the CEO, as somebody on management team, depending on the size of the organization, you should be a part of that process of approving all payables, and also then being a secondary or a signer or approver for the flow of funds to go out. If you're cutting manual checks, it should be a process where the accountant prepares the check, you sign it, then they send it out. If we recommend not doing manual checks, there's a lot of easy, low cost technologies out there. Bill.com is one of them, where it creates the payable cycle and the authorization and sign off from an electronic perspective. So the person who creates it doesn't have access to send funds, doesn't have access to get funds. So that is critical. Having at least two people in the process, so that there's not one person has access to just pull the funds out, is critical. And that's probably will eliminate 90% of all fraud, is having an approver on every transaction associated with cash.
Yeah, it's just such a tedious task, but where I've seen, now there are some really sophisticated, fraud schemes that are going to be tricky to uncover, right? But a lot of times when you hear in the news, you hear like smaller organizations, city municipalities, a lot of religious organizations, especially small churches, like these situations, you just see fraud running rampant. And what I've seen more often than not, I'll kind of go through like my hypothesis for why I think it's happening, but kind of in a broad stroke, it's because there is this like culture of like all these people involved within the organization, but they might have like one person that's like the token financial person. And that token financial person like does all of the accounting. Sometimes it's a board member, right? Our token treasurer that also happens to do the books, right? That person is, delegated all the responsibility for all things financial. No one ever looks at a payroll report. They never look at a bank statement. They never look at a credit card statement. They barely look at the financial reports. They get them. They have them in their hands, maybe, or they're in the inbox, but then they just listen to what the board treasurer is telling them, or whoever the part-time bookkeeper, whoever it might be. And everybody just blindly trusts that like whatever they say goes. And I think this is especially harmful in smaller religious organizations because they have exemptions from the IRS to not have to fill out a 990, and they don't usually have any reason to have an audit. So you have zero like outside accountant looking at any of this information, and no one internally is set up to look at or question any of the books at all. So this is where I see in the smaller organizations, you see in the news a lot, where people are, blindly, just trusting their accountant, whether it's a part-time bookkeeper or their treasurer or whatever.
Mhm.
This is why I say it's so important, as tempting as it is, please do not put your treasurer in a position where they are doing your accounting as well. Okay. Checks and balances, folks. Hire, somebody, or have someone, a volunteer, I don't know what it is, depending on your budget size, to do your accounting, and then let your treasurer be the one that's reviewing the work. But if you have one
Yep.
person and only one person doing it, and everybody's just blindly trusting the numbers without ever looking at anything, you're setting yourself up for potential fraud. And I'll say, for
Yep.
me, I mean, I have over 50 employees now. I look at every single payroll report, every single bank statement, the credit card statements, all the reconciliations. I'm not necessarily doing the day-to-day and proofing the day-to-day receipts, but I am looking at some very specific things. And of course, I look at the reports, I put the reports together, and I look at those very closely because I'm also an accountant. But the payroll, the bank statement, I sign every check. I use bill.com, Jason. I don't actually print manual
Yeah.
checks anymore.
Yeah.
People are like, I thought you were the charity CFO and like modern technology. I'm like, I do not print paper checks, but
Yeah.
I am approving all those, cash outflows. I know every single transaction that goes out of our bank account. And, I know I'm an accountant by training, but I think as the leader of a business, I need to understand the money going out and why it's being spent, so that if there's something weird going on, I can address it before it goes on
Yep.
too long. And so there's all kinds of creative ways people can take money out of your organization. They could be buying credit cards with your credit card. I even saw a situation where people were taking cash advances on the credit card, but nobody was
Mhm.
paying any attention because the vendor name was like, oh, we had
Yep.
paid Citibank. That's normal. Well, what's
Yep.
not normal is the transactions hitting that credit card. I've
Right.
seen situations, a lot of times people are manipulating payroll.
Yep.
They're like adding a duplicate employee. If you're not looking at the supporting payroll reports
Mhm.
and double checking the transactions, the gross pay, or the
Yep.
the employees that you're paying, I know that that's a frequent occurrence.
Yeah.
So look
We've
at your
seen that.
credit cards, look at your bank statements, look at your payroll reports.
Yeah. The worst offense I saw was someone had full control over payroll too, and they just gave himself a raise for one. No one's looking
Yep.
at it.
Yep.
They're also the HR, so I deserve
Right.
more. I give myself a raise, and then they started submitting through payroll expense reimbursement requests
Hmm.
uh, every month for significant dollar amounts that they were
Right.
getting reimbursed for, and they would get reimbursed through payroll and expense reimbursements. That's non-taxable too. So then they're getting that non-taxable. And this was actually a for-profit company, so they just buried it all in inventory. And
Mm.
inventory is a black hole, as for a lot of companies. And
Hmm.
over a period of 5 years, I think, or 3 to 5 years, she stole over $5 million from the company.
Wow. Wow.
Ultimately ended up getting caught through a bank audit. The
Mm.
auditors, the audit firm actually didn't, they were doing a review, did not catch it.
Right.
Yeah, the bank auditors found it, and she ended up actually spending some time in jail. So,
Yeah. So if you're an organization, think about the ways the money goes out of your organization, indirectly or directly. So think about expense reimbursements, which again might show up through actual checks cut to your employees. So looking at that, but like you said, it goes through payroll sometimes
deposit,
too,
yeah,
right?
exactly, yeah.
And if you're not paying attention to the transactions, obviously, checks, credit cards, like all those things that I mentioned, bank statements, credit card statements,
Mhm.
payroll registers, that's more or less how the overwhelming majority of funds go out of the organization. So that's all really good tips, Jason.
Yeah,
Well, as much as we would like to talk about all things accounting, audit, financial here, we do got to wrap up this conversation. Jason, this has been such a pleasure talking about all of these things that nonprofit leaders should be aware of. Sometimes they're not the most hopeful conversations.
mhm.
I rather tend to mix my doom and gloom with, cheerful optimism as often as I can. But these are real things. These are real threats to organizations. So I wanted to say thank you again for coming on and sharing a little time with us and talking about these things today.
Yeah, yeah. Thanks so much, Tasha. I really enjoyed it.
So Jason, like I said, you work for an audit firm. And if there are people out there that's like, hey, I need some support, Citrin, Cooperman, how would people reach out to you? What's the best way?
Yeah,
LinkedIn,
yeah.
or is that the best way?
LinkedIn, yeah, Jason Kruger at Citrin Cooperman. My email is the letter J,
Mhm.
Kruger, Kruger, at citrincooperman.com. Citrin is with a
Awesome.
C, so Citrin,
Mhm.
Cooperman.com. I'm always happy to talk to business leaders, nonprofit leaders. If I can help them, that's great. If not, usually we know somebody that can.
Mhm.
We have a great nonprofit team, a lot of resources.
Perfect.
So feel free to reach out at
Certainly
any
will.
time.
Awesome. Thank you. Thank you so much. And for those of you listening, if you haven't already subscribed to our content so you can get topics like this and other topics, we range in topics all over the places. If this is your first episode, we talk about all things nonprofits here. So go to our website, subscribe to our newsletter, or at a minimum, just engage with this content in some way so that other people can find information like this to help their nonprofits. See you all next time. Have a good one.